Assalamu alaikum. Welcome to question number 3 of AFM pre-September 2023 mock. Previously, I have solved question number 1 and 2. Question number 1 was on net present value. Question number 2 was on adjusted present value. And question number 3 is net present value once again plus capital rationing. Okay. So let's go through the requirements first. So in your question number 3, it's a 25 marks question. You are going to have your professional marks as well. So first question, you have to calculate net present value of project 5. 5 projects are given. Project 1 to 4 net present value is given. You only have to find the net present value of project 5. Okay. And then not only that, you have to calculate and comment on what percentage fall in the selling price before the net present value falls to 0. It's 5 marks. Both of them is 5 marks. Next, you have to formulate a capital rationing model. Okay. Based on capital rationing model, you have to formulate an equation. You don't have to solve it. Based on the limits, investment limits that has been set. And they have given you. Okay, that maximizes net present value for department sports. For 3 marks for that equation. B, assume the output in exhibit 3, they have given you the exhibit. So you only have to open this exhibit. Okay. When the capital rationing model in part A is solved, explain the figure produced in each of the 3 output categories. You don't have to solve. Okay. You just have to explain the figure. And it's for 4 marks. C. Okay. We have 2 parts to see where you have to explain why capital rationing is done for 2 marks. B, the features and benefits of capital investment monitoring system, CIMS, for 3 marks. Okay, and D, you have to explain when capital is rationed in a single period versus when capital is rationed in multiple periods for 3 marks. Okay, and you are going to get your professional marks. This is for part D. Okay, professional marks while you are explaining. So let's quickly do that. This is the easiest question that one can expect. So we'll go through the exhibits. As I told you, in exhibit, these are the investments. These are the 5 projects, project 1 to 5. Then if you see here, cash inflow starts from, this is investment, starts from year 1 immediately. So they did not put year 0, rather they have put year 1. But when you discount it, you have to take it to year 0. Remember this. Okay, even if it's year 1, because it's immediately, while you are discounting, you have to take it to year 0. So year 1 becomes year 0, year 2 becomes year 1, year 3 becomes year 2, like that. Okay, so for each year of the project, for example, in project 1, you can see this is the investment, 4 million in year 1, 1.1 million in year 2, and 2.4 million in year 3. And you have been given the net present value of the 4 projects. But for project 5, net present value is not provided. You have to calculate. That is your first requirement. Here, they have told that the capital rationing, what is the limit of the investment? So year 1, it's 9 million. Year 2, 6 million. Year 3, 5 million. Okay. Now, so that's it. Opening exhibit 2. This you need for your cash flow. Okay, and also to find the percentage fall in the selling price before your net present value falls to 0. You need exhibit 2. Here they have told that project 5 commences from year 3 onwards. That means end of year 4. And lasts for a period of 15 years. So after year 3, if you take for another 15 years, okay, it generates this project. Okay, this is specifically for project 5. Okay, annual sale is 300,000 units. Selling price is 14. And cost is 3.23 million. Okay, and return required is 11%. This is your cost of capital. Okay. Then they have told in this para about capital rationing and all. So we'll open 3 and we'll see. This is what you have to explain in one of the requirements. Okay, you can zoom it. As you can see, category 1, what does this amount means? You have to explain. What does this amount means? You have to explain. What does this means? Slag and constant utilize. You have to explain. Okay. So we'll quickly start answering our requirement 1. Calculating net present value, opening the spreadsheet. Okay, forget about this. This I've calculated before. Something else. So it's very easy. Okay, remember you need the annual cash flow from year 3 onwards that you have to calculate. You are only given for year 1, 2, 3. After that, till 15 years, you have to calculate how. You have been given the selling price, you have been given the units, you have been given the cost. Using that, you can find annual cash flow. So let's quickly do that. Okay, it is annual sales of P5. I'm writing P5 for project 5. Okay, expand this. Done. So here equal to, what is the selling price? 14. Multiply this with 300,000 units. Enter. This is the amount. Then we have annual cost. Annual cost is already given. How much? 323,000. Enter. Now, when you are doing annual cash flow, sorry, it's here. Cash flow. Just simply deduct this from this. This minus this. Enter. 970,000. So this will be your cash flow from year 4 to 18, because they told after year 3, 15 years. So if you add 15 with year 3 onwards, the total year is year 18. Stops at year 18 from year 4 to 18. Okay. So now this is how we have to do it. Year. CF, cash flow. Then discount factor. At what percent? They have already given you. At 11%. Then what's next? Discounted cash flow. Okay. I can make this bold. So what's the year? 0. Even though it says year 1 immediately, for discounting purpose, immediately means 0 only. 1, 2, 3. And then 4 to 18. Okay. Okay. Now cash flow. Discounting factor. Sorry. So you have to open this. Sorry, first one. So here you can see it is 2.5 million, 1.2, and then 1.4. These are investments. So it will be in a negative figure. Okay, this will be minus. I'm going to expand this little bit. Okay, so it's minus 2.5 million. Next, it is minus 1.2 billion. Then it is minus 1.4 million. Okay, and then year 3 nothing, discounting factor at 11%. So quickly open here and go to AFM formula and go to discount table. 11%, take 1, take 2, take 3. This will be 1 because this is 0. Then the next one will be, we'll use the table, 0.901. You have to double click. 0.901. Next, 0.812. Next, 0.731. Keep it ready. And here, what do you need? Okay, here 970, the amount that we just got now is inflow. Okay, you have to use the annuity factor for 4 to 18. When you use the annuity factor like this, see very carefully. This is the formula. It is not there in your textbook or anywhere else. That's why you have to do revision good questions, mock papers to learn these techniques. So, because you always get new things in papers, which is never practiced in textbook. So this one will be, you have to take for 50. See, when you check the annuity factor table, go to the annuity factor section, go to 11%. Okay, you can only get for 15%, 15 years. But this is till 18 years, right? You can only get till 15 years. This is 7.191. Okay, so what you need to do is, it is 7.191. You have to multiply this by this third year. Why? Because this 4 to 18, you have to bring it back to year 0 when you're discounting present value. Okay, because it starts from that year onwards. So for example, if it's 4 to 18, when you discount, you will multiply it with year 3 discount factor. If it's from 5 to 18, you will multiply it with year 4's discount rate, the previous year. This is fixed. This rule is fixed. This is known as terminal value in AFM. This is how you find the formula. This is the method, fixed formula. So don't ask me why did we multiply it with the year 3's discount factor. That's how you are going to get. This is the terminal value. No matter, it could be 420, 4 to 4 to 12, 30, like that. But they will not give you beyond this. Why? Because in your table, annuity factor is still 15 years. And if you take 4 to 18 years, it is 15 years only. Count 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 15 years. So highest is 15. And you have to discount it by year 3. Because even if it's 4 to 18, you assume it is at the end of year 3. So discount it back by using year 3's discount factor. If this was 5 to 18, you would be discounting it by year 4. Okay, enter. This is the amount. You can bring this to 3 decimal places like how the other discount factor is. Okay, because others are in 3 discount factors, 3 decimal place. So bring this also to 3 decimal place. You could manually do it, or you can use a round figure. So you can go here, or we'll see through the formula whether we can round this or not. Format cell, number, okay, all. So as you can see, this is 2 decimal places. Okay, okay, we don't have, but you can round this to 3 decimal places using this round. This is a function. It's given here also. Go to help formula sheet, go to workspace help, and see here. You see round. You can round. So you want, see, this round is not based on decimal places. It is based on digits. So before decimal you have 1 digit, that is 5, and you want this to be round to 3 decimal places. So before decimal 1, after decimal 3, total in 4 digits you want this. So you are going to round this to 4 digits. You need to click this and you place comma and 4, because 4 digit, 5.257. Enter. Sorry, it's not 4, it's 3. Because after decimal they are taking. Okay, that's how it works. Okay, I didn't know that, but anyway, round to 3 because 3 decimal places. Okay, this 5.257. You can take it like this. Okay, now just still let me check here. No, it's 2 decimal places. You can always undo. Okay, I'll copy this here, paste. No, the reason is it is with the formula. Okay, so when you're pasting this, we'll do the function again. This into 7 point, we'll have to see the annuity factor 7.191, comma, this, enter. See, you have to go and format the cell generally. Okay, this to 3, enter. You can later on copy paste this figure here. Okay, let's say copy this. When you want to copy paste here, paste special, click with the formula. Okay, because when the examiner clicks the rounded figure, they know that formula has been done there, and then you have rounded the figure. Okay, it's coming here, but okay. Okay, it's showing the rounded figure, but 7.191, enter. Okay, we'll leave it as it is. It's fine. So now DCF is simply this multiplied by this, enter, and then just drag it down. Okay, and then sum function equal to sum, enter. So this is your net present value. You can round this to whole number. Okay, you can go here and go here and straight away go to format cell, this one. Okay, so you can see it is 3800922. Now see this, if you see the answer, examiner has told if you use the calculator here to discount this calculator and this Excel, it will give you different figure, slightly different figure you will get. Do not worry, you will still get the same marks because the method is correct. Numbers might be here and there a little bit different, but still you will get the same answer. Okay, so now what's next? You got the net present value. Now they told what is the percentage fall before present value becomes 0. Net present value falls to 0. For that, you have to add all your present value of the project's annual cash flow. So if you see, okay, this is the cash flow. So here, this, okay, plus this, plus all these are outflows. Your outflows will add enter. Okay, so your outflows has to be equal to inflow. That means it has to be equal to this amount. Okay, now so how much your cash flow has to reduce? You have to find the, you have to find what? See, this amount, we have to work backwards now. This amount you have got after doing all this, after discounting the cash flow. We need to go from discounted cash flow back to the cash flow. So whatever we have discount, now we have to do reverse it. So this, okay, you have to, earlier you multiplied, okay, you multiplied by this amount, okay. For 4 to 18 cash flow we want to get, right? This is the amount we want to get. So we multiplied, this was the cash flow. Now we have to work on this amount, right? We multiplied this 5.2 with this and we got this. Now we have to work backwards. Now this is the amount. So now we have to divide by this amount and work backwards to get this amount. Amount will be something else. So from discounted cash flow, we are working back towards cash flow. What did we just do now? We discounted cash flow and went to DCF. This is DCF. We want cash flow. So we have to divide. Rather than multiplying the discount factor, we have to divide now to move back to the cash flow. This is what we are doing right now. Okay. So now here, I'm not doing it in one go, otherwise you'll be very confused. So we'll do this, divide by this amount because we already have this. Enter. Okay. So you can even bring this to whole number. As I told you, I've taught you a formula. Go here, this big format cell, this. Okay. You see, 897, this is the amount. So your annual cash flow needs to reduce by this amount. This is the amount. Your cash flow has to be reduced by this much. Now it is 970. From 970, your cash flow has to fall to this much. What is the question? We want to find how much our cash flow, how much our net present value has to fall. I mean, how much our cash flow has to fall before our net present value is 0. To know that, we have to work back to cash flow, right? This is not minus, there will be a plus, okay? Because this I worked on a minus figure. You can convert this to a positive figure. Just simply take this and multiply it by -1. Enter. Format set 0. Okay, done. Okay, this is the amount. So your cash flow needs to fall up to this amount from 970 to this amount. Now we want to, this is about cash flow. Remember, cash flow is our sales minus cost. We got this amount. Remember earlier here, see, this minus this, we got this. Now we have this much. Now work backwards again. We want to know the sales now, but the cost is fixed. Cost will not change. So what do we do? What do we do? This is like a maths now. You are solving a maths equation. It's like filling the blanks, going backwards. Okay, so now you know this is your cost. So just simply add your cost with this. Enter. Always round it up so that the number looks easier for you to read. Otherwise, it's very difficult. You have to scroll it to make the screen bigger to see this format cell. Okay. Okay. You see, this is the amount. This is the amount of what? So your sales revenue need to reduce by this amount. 412. Now it is 420,000 currently. Okay. But this is the sales revenue. We want to know the selling price. How much selling price has to fall down? I know it's a little bit complicated, but it's like you're working step behind each time. First, we converted this CF to CF. Then we added cost and we got the sales. This is the amount. Now we want the selling price. So it's very simple. Simply divide this by the quantity, that is 300,000. Enter. So format cell, go here and okay. Okay. So it's 14. You see? But don't do 14 because current day selling price is 14. So keep this to 2 decimal places. Okay. Again, go to format cell. Keep this to 2 decimal places. 13.76. You see? Earlier, your selling price is 14 currently. That's how you got this amount. You multiplied 14 by 300,000. So now we wanted to get this amount. That's why we divided by 300,000. Okay. So now the selling price is 13.76. This is the selling price. We want to know the percentage. The question clearly asked you. Go back to the requirements if you forgot. Clearly the question specified. Percentage fall in selling price. They didn't say fall in selling price. Percentage fall in selling price. So if you calculate selling price also, you will not get the whole mark. Read requirements word by word. How do you get the percentage difference? It is very simple. 14 minus this amount divided by 14. Enter. Sorry, you have to put a bracket here. Enter. Wait a minute. I think. Okay, it's not. It is this. You have to put bracket here. Enter. Now you have to convert this to percentage. How do you do this? It's very simple. Go here. You have a sign here. So go here, click this sign, and you can decide how you want your percentage to be shown, to one decimal place or two decimal place. Okay, so we'll show it to one decimal place. So you can see here it is 1.7%. Very small change. That means this is good or bad for the company. Tell me. It's bad. It's bad. Why? It's very sensitive. Small percentage means very sensitive. That means even if your selling price, if you increase, okay, your selling price by a smaller amount, sorry, reduce your selling price by a smaller amount, net present value will fall below 0. Okay, so you have to comment on this also. See the requirement, they always told comment, calculate and comment. Don't forget the comment part. So you can write here in word processor, you can comment. You have to label it's A, first one, and then you can see project 505. It's very sensitive to the changes in the selling price. That means a small fall in the selling price would reduce the net present value to nil or negative, and project might not be worthwhile. This you have to write. Okay, you have to comment. Now first part is over. So our requirement, this part is over. A lot of work is there just for 5 marks, you see, but you need to be very fast. You have to calculate net present value, then you have to calculate the percentage fall, then you have to comment on that. now now you have to form an equation. Okay, so now you got the net present value of project 5 also. So now it's about forming the equation. So how do you do this? Remember, first identify whether it's a multi-period capital rationing or single period. In AFM, you will be given a multi-period. Single period they have tested in financial management. Here they will test multi-period. In multi-period, you can't use profitability index, how you used to do in financial management, to rank the project and then you will decide which project to start with. No, here you have to form an equation. You have to use linear programming. Okay, I have taught in my AFM lecture what is linear programming and all those things. So I'm not going to waste my time. This has 5 projects. So I'm going to keep a variable as a project. Project 1, project 2, project 3, project 4, project 5. It could be any letter. You can choose any letter. Okay. So you have to start by saying this. Okay. I'm going to do this in my Word, not Excel, because this is more of typing rather than any calculation. So let the investment in projects. I hope you can see my screen. It's not too small. Okay. So let the investment in projects be as follows. You have to write this. What you are mentioning. You just can't write any variable and say. So here you can keep any, okay? But here let me keep y1. You can keep x1. You can keep a1, b1, anything. It's fine. y1, y2, y3, y4, and y5. Okay? Equal to investment in project investment in project 01. So same way Just copy paste this to your other, then just change the projects. So like that, investment in project 3, investment in project 4, investment in project 5. Y1, Y2, Y3, Y4, Y5. Can do it quickly, okay? Now, remember, what is the objective? There could be two objectives, either to maximize net present value or to reduce cost. Clearly, they have mentioned the objective. Objective is to maximize the net present value. They have told. So your objective has to be same. This is what you have to write. Then, the objective is to maximize net present value. Now take all the 5 projects net present value. Where will you get it? Exhibit 2. Sorry, exhibit 1. They have given already 464,000, 244,000, 352,000, 320,000, and this one recently we have got here. Project 5. Where is it? 380,922. Okay. So you can drop the thousands and write. You can drop the thousands also and write. For example, here, rather than writing 464,000, 244,000, you can just write 464, 224, 352, 320. It's understood. Okay. Don't worry too much. Go back here. Project is to maximize this. What is the first year? 464,000. So I'm going to write 464. Remember, here Y1 is investment in project. So you have to multiply this with the investment in project 0, 1. So rather than writing investment in project 1, investment in project 2, you are going to use these variables that you have just mentioned here. Y1, Y2, Y3, Y4, Y5 for investments. Okay. Y1. So 464 is the net present value of first year. Y1 is the investment in project 1. So multiply that like that. For every project like that, you have to do the same. Net present value of project 2 multiply by investment in project 2. Net present value of project 3 multiply by Y3. Net present value of project 4 multiply by Y4 and Y5 with the net present value of project 5. Like that. So while doing this multiplication, you have to add along. Project 1 add with project 2. What is the project 2's net present value? 244,000. So 244 Y2. Y2. This is, I've written Y 2 times, okay? Like this, you have to do this for 3. Project 3. 352,000. So 352 Y3 plus fourth year. Sorry, fourth project. 320 Y4 plus. Just now we have got the project. So 380,092. You can write 380. Okay. In your answer, if you see, they have got some 383,000. The net present value is around some 382,812. They have rounded to 383,000. But it's okay. They must have used calculator. We used Excel and we got this amount. It's fine. Because examiner clearly told differences with calculator and Excel is acceptable. So here, oh, it's in word processor. So I'm going to use 380 for 5. Why 5? Now, you have to give the constraints. Remember, you are just setting the equation. You are not solving. So this is the third step. Third and the last step. Given the following constraints. You have some constraints. Okay. You have constraints in all the 3 years. Year 1, year 2, year 3. Okay. So year 1, what was the investment constraint? That it should not exit 9 million. You can go back and see in case you forgot. Here, 9 million, 6 million, 5 million. So year one constant is investment constant should not exceed $9 million. Okay. Same way for year 2 and year 3. Investment constant should not exceed 6 million. Investment constant should not exceed 5 million. I think you can do that. So I'll just show you for year 1. When you are taking this, again open one and see all the projects you have to take. So now you have to work downwards like this, vertically, not horizontally. This is year 1. When I'm selecting, all are coming. Okay, so you can see here 4,800,000, 3.2, 3.9, 2.5. You have to write like this, multiplied with y1, y2, y3, y4, y5. Okay, same for year 2. This, but in your project 4 for year 2 it's 0, and here also is 0 for project 3 in year 3. So I'll show for year 1. So what is the project 1 for year 1? 4,000. Y1 plus 800. Y2 plus, what's next? 3,200. Y3 plus 3,900. Y4 plus 2,500. Y5. And it should be less or equal to. Okay. Now how do you show the less or equal to sign? That's another thing here. Okay, anyway, if you don't have less or equal to, so just write less or equal to, just write this. Okay, you might not have that sign, less or equal to sign, so just write less or equal 9,000. Same way for year 2 you have to do less or equal to 6,000, less or equal to 5,000, but only wherever you get 0, so you'll be writing like this. For example, 0 y3, like that. Okay, instead wherever it's 0, you just have to put 0 in that amount. Still you have to show, even if it is 0, you can't ignore it. You have to show all the 5 like this for year 2 and year 3 also. Even if it is 0, you have to show with 0 y4, 0 y3, like that. So I'm leaving it up to you. You will be able to do it. Okay, that's great. Now you have to mention this at the end, and where y1, y2, y3, y4, y5 is greater, or you can write this because you don't have that sign, greater or equal to 0. Okay, now coming to part B. What is the requirement for part B? We'll close this. Excellent. Okay. Second is B. A is over, both the part is over. You have to explain the figure in exhibit 3. Category 1, category 2, category 3. I'm not going to write it for you, but I'm going to tell you the explanation. You can write it in Word. Okay. First, start with category 1. You have to label it. You have to write this and then explain. You have to write this and then explain. You have to write this and then explain. Category 1, 2, 3. So total final value means it is the maximum net present value that can be earned within the 3-year constants of capital expenditure. Okay. But remember, this amount is less than the total net present value of all the 5 projects if there were no constraint. This constraint means, this amount means, this is the maximum net present value, okay, with the 3-year constant. But if the 3-year constant was not there, net present value would be more than this amount. This is the meaning of this. Category 2. Category 2 means it shows the percentage of that project that you can take. with the constant, of course. So project 1 means 95.8% of project 1 you can take. This means 40.7 of project 2 you can take. Project 3 you can take 73.2%. And here it is 0, that means you can't take any of project 4. And project 5 you can use entirely. It's 1. Okay. So all of the project 5 you can undertake. This is the meaning of it. Category 3. Slag means if you have not utilized your constraints properly. That means there are some unused resources that is left. But since slag in year 1, 2, 3 is 0, that means you have utilized your constraints fully. There is nothing that is left that you have not utilized. Okay, that's it. So now what's C? See, explanation part and all you can do. I don't have to write it for you. Explanation is there. Read the answer, but let me tell you the key points to write. Here, 2 marks. So 2 points you can give. Why capital rationing is imposed. So what do you think? It's imposed. Just from your idea. First of all, do you know what is capital rationing? You have to know the meaning. Capital rationing means when you're imposing a limit on the investment. Theory, if you go by theory, what does theory say? Undertake all the projects that gives you a positive net present value, because that means maximization of shareholders' wealth. But in reality, can you take all the projects? If you have 5 projects, can we accept all the 5 projects? Because all the 5 projects are giving us positive net present value. Is it possible? No. Why? Because our funds are limited. Funds are limited. So with that fund, we can't take all the resources, all the projects. So now we have to, so that is called capital rationing. Now your capital investment is limited. So why do you think this restriction is there? You have to give reasons. You have understood the meaning. Now tell me 2 reasons. Any 2 reasons. See, there are 2 types of capital rationing. Okay. One is hard, one is soft. Soft means internally they are imposing. Hard means external. Okay. So managers might impose this limit on the company. Like they might want you not to borrow an amount. They want to bring down that amount to a certain level. Okay. Then hard rationing, the external one. This could be from the bank. Maybe bank might have imposed you the amount of loan that they can lend you. So if they have put a restriction on the bank loan, you can't invest on all the projects. Right? Now, next one. Explain the features of capital investment monitoring system and discuss the benefits. So what do you think? One para, you can explain the feature. One para, you can give the benefits. In fact, so you decide. Are you going to give benefit, one benefit or 2 feature, or 1 feature or 2 benefit? Because total is 3 marks. So feature of capital investment monitoring system is to monitor how the investment is going. Is it progressing or not? Are you finishing the project in time or not? Are the risks clearly identified or not? So it looks after all those things. It says a milestone, what you have achieved, when you have achieved. Now, what about the benefits? Benefits are that the system, capital investment monitoring system, tries to ensure that project have actually achieved the revenue or not, or whether it is incurring less revenue than expected or more expenses than expected. This system will help you. So you become proactive rather than reacting to the situation. You can also see whether project is completed on time or not. Okay. And also this will help you to manage your risk better, therefore reduce your cost. Now, There are so many. In your answer, if you see, paragraph is very big. Why? Because they have given you so many features. They have given you all the possible benefits. But limit yourself. Mark is only 3. Okay? Don't write all the benefits and don't write all the feature. Only 3 marks. Next is D. Again, single period rationing and several period rationing. Discuss. Single means it is only for the single period, 1 year. So if it's for 1 year, use your financial management knowledge here. You see, even if single period capital rationing is not explained to you in AFM, don't be under assumption that it will not be tested in AFM. It will be tested in AFM. Why? All your financial management knowledge, whatever is taught to you in financial management, can come for AFM. Can come. There is a possibility, like how this have come in the pre-September mock. So this is for you to show that even in your exam, be prepared. Don't completely forget financial management and think whatever is there in the advanced level only will come. No. Single period was tested in financial management. Again, they have asked. So you should know the differences. One difference is it is in single period. And another thing is to decide the project, you solve them based on a ranking. You give the projects a rank based on a profitability index. You have to calculate a profitability index first. How is it calculated? Net present value of the project divided by capital investment needed in that restricted period. That's how you get. Okay. And whichever is giving you the highest profitability index, you rank them first, then second, then third, then fourth, like that. It's easier. But when you're coming to a capital rationing for several periods, that is known as multi-period capital rationing, for which we just now did linear regression model, which we haven't solved. Okay, because you can't do profitability index if it's for a multiple period. So you can only do this. How? A linear programming. Just now I've showed you how. You have to formulate a linear programming model. And the solution to that linear programming will give you the combination of the project that is needed to give you the highest net present value. Like how they have given you here. You see? Here. That use 95.8, use 100% of project 5, like that. So that's it for question number 3. With this, I have finished the entire AFM pre-September 2023 mock series. Please do watch my question number 1 and 2 and wish you best of luck for your AFM exam for this September 2023. And don't forget to subscribe to my channel and do share this video with your friends so that they get this help, last minute help before their exam. And please, please, please be prepared. Practice your revision. At least do the mock. At least do 3 to 4 mocks before your exam. For all the papers, not just for AFM. It is for AAA, SBL, SBR, anything. And for SBL and SBR, there are new changes. Do go through those changes. SBL has a pre-seen material. SBR has a populated balance sheet. Do go and check. And best of luck.